As companies continue to grind out results this week, media mogul Kerry Stokes livened things up by creating a few headlines of his own, with a controversial plan to back his private bulldozer and heavy machinery dealerships into his publicly listed Seven network. The connection between mining services and media were not immediately apparent to anybody, but for Mr Stokes, putting the cash-rich Seven together with his debt-laden Westrac looks like a neat fit. As Neil Woolrich reports, minority investors are yet to be convinced of the deal's logic.
Who will play for all that cash?
Channel 7's biggest shareholder, Kerry Stokes, is known as an audacious deal maker, but his latest manoeuvre has left long-time Stokes watchers gasping.
It is a transformational move, and we believe will strengthen the business for all shareholders and provide a new company with a strong balance sheet, great management, market-leading assets, and an even stronger in the media investments and the equipment management sector.
Well, it's quite ironic that Channel 7 has just received a massive tax cut by the federal government through these television licence fee rebates, and now Kerry Stokes has come up with a very tax-efficient corporate restructure.
Kerry Stokes says he's unhappy that Seven Network has been trading at a discount on the stock market for some time. To tackle the problem, he wants to combine Caterpillar trucks with Cougar Town.
Good God, Barb.
The proposed share swap will merge the Seven Network with Westrac, the main asset in Kerry Stokes' private company, Australian Capital Equity. Westrac owns Caterpillar franchises in Western Australia, New South Wales and China, along with stakes in National Hire and Coates Hire. The Seven Group includes the television network, magazines and stakes in other media companies like Consolidated Media and West Australian newspapers. The proposed transaction will increase Mr Stokes' interest in Seven from 48% to 68%. Seven's minority shareholders will be left owning 32% of the combined group.
For the minorities, you would have to think that that doesn't make much sense at all. I don't know where mining services and media comes together. I mean, I don't think mining services even advertise that much.
At a rare public outing on Monday, Kerry Stokes' top executives were eagerly talking up the deal's merits.
With Westrac, Seven gains exposure to the resources sector and the rapidly growing Chinese economy. This is a low-risk transaction for Seven.
Cash and commerce, pal. That's what it's all about.
This new company gives us a stronger balance sheet, greater access to capital, and that's very important, stronger cash flows and the power to do what we want this company to be.
But for the most part, investors remain wary at best. Seven Network shares dropped more than 5% on Monday before recovering most of that loss over the course of the week.
Investors in there are looking, one, for a bit of media exposure, but two, asset backing. Now you vend in the ACE assets or predominantly Westrac, which has got what we've been told $1 billion worth of debt. And you've got a business that's totally different in every facet compared to the media assets. So it's an incredibly strange deal.
Mark McDonald says in principle the merger makes sense, but points out that pricing may be an issue and he believes the wrong valuations could dilute Seven's minority shareholders.
It's either a case of Seven being somewhat undervalued, Westrac potentially being somewhat overvalued. Either of those things lead to a dilution of the independent shareholders. The two things in combination lead to an even greater dilution.
Seven Network Group has net assets of more than $10 per share, whereas the proposed deal prices the group at $8.70 a share. While that's a 19% premium to the current share price, the valuation assumes the group's television, magazine and internet investments are worth nothing. However, in the accounts released this week, those assets have been revalued up to $380 million.
On my sum of the parts reckoning, just using those advertised values and the director's own valuation of Seven Media Group, we should be seeing something closer to about $10.33 rather than $8.70.
Let the dealing begin.
He bought Channel 7 incredibly well back in the 90s. He sold a half interest incredibly well. You'd never underestimate his ability to make money.
On top of concerns about Westrac's billion-dollar debt, investors and analysts also question the forecast that Seven Network's profits would fall between now and 2011. And they're worried about the prospect of Westrac losing its Caterpillar franchise, something that independent director Peter Ritchie says is unlikely. Kerry Stokes now faces a major battle to convince institutional shareholders to support the deal. Two funds, Ausbil Dexia and Perennial Value Investments, own around a quarter of the stock that's eligible to be voted. Neither has made a commitment to support or reject the deal. But market watchers argue the transaction will need to be significantly repriced if it's to succeed.
I think there's absolutely no chance the deal will go through in its current form. The rumblings from institutions and the proxy advisors are all talking about this is an inflated price and there's no synergies.
Seven Network's independent directors unanimously support the proposal.
We had a very robust negotiation, and after several weeks we believe we've finally agreed attractive terms for the SNL shareholders. The independent expert has determined that the transaction is fair and reasonable and in the best interests of shareholders.
But shareholder activist Stephen Mayne says the $2 billion price tag placed on Westrac is too much.
I think they've not been robust enough in negotiating with Kerry Stokes, and I think they should have negotiated a better price, and that they will have to negotiate $100, $200 million off the price before shareholders will accept it.
The one thing about Seven and David Leck is we're not boring.
I'm so happy with this. I'm going to take the money. Deal.
And for the next few months at least, Kerry Stokes' latest deal will be compulsory viewing.